to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back. Another kind of slow week. Actually, the market's doing very well. It's recovered up quite a bit off of its bottoms. It's amazing to me to watch how quickly markets can move in both directions. Welcome to the world of artificial intelligence. Key word in that phrase, artificial. It's not real intelligent to be throwing stocks around like they are, but it's happening anyway. And that's not our problem in life. Our problem is, one of our problems is to figure out how to deal with it. And I think it's a pretty healthy thing. I'm pretty sure that we're going to come out of this better, stronger. It'll actually recover more quickly than it got there to begin with. And I think that's kind of a really interesting thing when you start looking at what's happening. And so many people are just so negative. I'm amazed. Like, when the airlines start flying again, if you can afford it, do yourself a favor. Try to take a trip somewhere. I think you can go to Nashville for under $100. So when the whole idea behind this is when you go down to Nashville, when you fly down there, and I'm pretty sure the least expensive flights, who knows when they start flying again, but I think they were Southwest. Take a look down at the ground when you're up in the air. Okay, and by the way, that whole flight I think it's about an hour from takeoff to touchdown. It's about an hour. And you're going to be flying over 500 miles in an hour. Take a look at all that stuff down there. All those roads, all those farms, all those buildings, all those houses, all those factories. All that stuff was built by the people that live in this country. And here's the thing. Once you've done it once, doing it a second time, not nearly as difficult. You figure out a lot of the things that you probably shouldn't have done the first time you did it. So you're going to get to have the experience in your favor there. You won't repeat those mistakes. And if that were the only thing, that one thing would allow us to get back to those levels faster than we got there the first time. So think about it. And that's just a really good thing. I guess I'm going to take a phone call right now. If you'd like to call in 216-901-0945. And this is Bill Bullington. Who am I speaking with?
Good morning, Bill. I think we should boost. We'll get through this. Few things I want to. The devil is in the details. We should all pitch in, including the enrolled agents, payroll people, earned income tax credit people. Community banks are doing a better job than the bigger banks. One thing, though, 17-year-old are there, part of the dependents. 18-year-old working part-time, sometimes they don't make enough money to file taxes. So the database and the Internal Revenue don't have their numbers. So there is no foolproof system. There is no one-size-fits-all. I think we have done the best job that I can think of in 60 years, in right. terms of meeting the problem that we didn't. Unlike 2008, which is a self-inflicted wound, unregulated, now Mother Nature is attacking us. Mm-hmm. I think if we can't pitch in now, we are not Americans. That's right. The way I'm going to put it. Yep. And we could do a few things. Congress is not in session. Some of them are home. We could probably request the Internal Revenue. After all, the people who need the most are the ones who don't file taxes, earned income tax credit people.
Right.
Number two, some of them move around a lot. Even if the check is in the mail, it gets returned. See, I'm not trying to say the negative things, but the last leg of the journey, even the net neutrality internet age, the last mile is the most difficult thing in the delivery system. Right. Supply chain is disrupted, but part of the problem is my own habit of hoarding things when everything is going wrong. So it's devil in the details.
Mm-hmm.
I don't want to throw the baby with the bathwater, but I think a lot of small businesses, payroll people, they could pitch in. They can get paid by Uncle Sam, like any other person with a waitress.
Sure.
I think we should all pitch in. This is the time to pitch in.
Right.
And if we don't, I don't know what America is all about.
Right.
And Internal Revenue is doing the best they can, but the 18-year-old college student who is not a dependent on the tax return of the family, how is he or she going to get any money?
Right.
See, there's a lot of people through the cracks. They'll fall through.
Yep.
But the biggest thing is element is the time.
Right.
The ones who need the most money will be waiting in the line for 6 weeks, 8 weeks maybe. Mm-hmm. By the time it picks up, probably the fourth quarter, even if the good old-fashioned U-shape return economy, it'll probably the fourth quarter. And I'm not an economist. I'm just seeing the life as it is.
Right.
I never thought in such a short time, Mnuchin and all two branches.
Sure.
They've come through the best liquidity thing I can think of in any sense of the word.
Yeah, absolutely.
And there's no need to flip a coin, yes or no. I think they did a beautiful job, and I'm not trying to politicize the thing. It doesn't matter, Republican, Democrat, Independent, it doesn't matter. Treasury and the Federal Reserve, I think monetary policy and the fiscal policy, they have come through live to meet the devil right in the punching them. But yeah. But there are some cracks in here, because even if you put the line to receive the money, the paperwork, you can go through the ATM to apply for a loan, and skeleton staff at community banks, right. And none of them are ready on Friday. I called a few banks just so that I can tell you this.
Right.
But maybe we could allow payroll people, that is preparers, enrolled agents, just like the lawyer is an agent of the law, right? Enrolled agent can be an IRS person. They're used to, they've got a database. Most of them are filing online. So why not? Just like the medical field, we use the private industry to come in. They all paraded on this conference, right?
Yep.
Why can't we include all of them? Because they're all registered. They can go under the radar, and I'm sure there'll be some crooks once in a while. Yeah. I'm sure I'm getting emails for, masks that can protect me from until I die. There's no need to panic. I'm saying this not to belittle the thing. It's the spirit of the season, too. Yep. I think we have to pitch in, and everybody has to pitch in, and I've got a lot of faith in it. This is a Marshall Plan and Manhattan Plan combined.
Yep. Well, thanks,
Keep
John.
up the good work. Keep up the good work.
Thank you. Have a good weekend.
Bye-bye.
Yeah, along those lines, everybody pitching in. This is kind of interesting. I had somebody send me an email. It's actually a doctor, and don't worry, I'm not going to name you. Would never do that. But he asked that I would talk about and I think this is what he was talking about. He asked that I would talk about how people who didn't have health insurance were going to be able to get treated for the coronavirus for free. And I thought that was pretty interesting. So, in fact, this is the article I just found on that topic. It said the federal government will use a portion of funds provided by the Congressional Relief Acts to cover coronavirus testing and treatment for the uninsured. And that was from the United States Secretary of Health and Human Services, Alex Azar. He went on to write, or the article continues by going, funding from the Family's First Coronavirus Response Act will be used to cover testing and other diagnostic services for the uninsured, as are explained during the daily White House Coronavirus Task Force briefing. A portion of the $100 billion provided by the CARES Act will be used to reimburse providers for coronavirus-related treatment costs for the uninsured. Providers will be reimbursed at Medicare rates and will be unable to bill an uninsured patient for the balance of their care, according to Azar. This should alleviate any concern uninsured Americans may have about seeking the coronavirus treatment, President Donald Trump said on Friday. So it's pretty interesting. Hopefully that covers that fairly well. So I guess if you go into a healthcare organization, if If you think you have the coronavirus and you don't have health insurance, don't be afraid to go and get treatment. That's pretty neat. And what John was talking about, too, a lot of the programs that he was talking about, the Fed stepping in, Federal Reserve System, and the Treasury, Secretary of Treasury, Mnuchin, these guys have acted incredibly quickly. And we've never been faced with something like this before. So it's the first time. But we've had other crashes, other financial crashes that had different causes. So a lot of the people in this particular administration were here during the housing crisis. And they actually did a good job there. I think that job was probably a little bit more difficult because of all the paperwork that was involved with all the millions of mortgages. You ever see a mortgage application? And you've got to go through all that mess. That's one of the reasons that the recovery was so slow. It's just it got bogged down in paperwork. And they're trying very hard not to have that happen again. And I think it's really fascinating. It's interesting, but I'm really glad. I'm always talking about how there are so many more smart people behind the scenes than anybody realizes. Because quite frankly, a country the size of the United States that operates as well as it does. I mean, think about this for a second. You've got over 330 million people. 330 million people. And we live kind of far apart in this country. That's one of the advantages the United States has over a lot of the other countries is we live farther apart. That's why the social distancing thing has a tendency to work well here. It's why it's almost impossible to do in a lot of the European countries, Italy being one of them. Population density is 4 to 5 times the amount here. A lot of Italy is similar to New York City. People, I can't imagine. I've spent some time in New York City. I just can't imagine how difficult it must be to prevent the spreading in that city. I mean, people, you live right on top of each other. You look out the window, 100 stories in the air, and 20 feet away, you're looking into the window of somebody else's house, somebody else's apartment. It's just mind-boggling that things are actually going this well. It really is. I'm amazed. And what happens then after this is over, whenever that happens, is that we've got a lot more experience. The economy is going to be changed permanently. It's going to be for the better. Jobs will have been created. Many of them, many people who probably used to work in the food industry may decide to go back to college because many of the diplomas that you need are typically 18 to 24-month programs that can be taught through your a local community college in many cases. And you can qualify then for a really good job where they're going to be hiring a lot of people going forward. So that's a beautiful thing. So that's in addition to everything that we had before this pandemic occurred. And, that's unfortunately in a lot of instances, through pain comes growth. You get stronger when you're tested. And most of the time you get a lot stronger than you would had you not had the test. So the silver lining again is new jobs being created. They're going to be new drugs that get patented. Countries have worked together like they've never worked together before. So those lines of communication will more than likely remain open. And even if they don't remain open, they're easily accessible because we've had the experience of going through this now. And the total effect of this, it's a positive thing. It's an extremely positive thing. And incidentally, I have this service, and they help me. They scour through a lot of publications. I forget exactly how many. There are a few hundred of them. They have to do with finance. And they pull up articles and they say, hey, would you like to send this to your clients? So then I'll read it. And if I approve it, it goes out. Or if I approve it, sometimes it goes up to LinkedIn or Facebook. Actually, I don't think I post much to Facebook. But anyway, so when I see something and that comes up and I like it, I'll click on it and say, yeah, go ahead and do that. And one of them, I bookmarked it, and I can't find the bookmark. I'll have to go back and find it. So anyway, while I'm talking about LinkedIn, anyway, there was a pretty good story, and it was from, I'm trying to remember, it's from the New York Times. This showed up in the New York Times. So I've been getting this question: how will we know when it's safe to leave our homes again and reopen the country? I can't tell you how many times I've been asked that, which I find kind of funny because I'm not a healthcare official and I don't work for the government. But so, I'll dig around and see what I can find. In fact, I didn't search LinkedIn. I searched Google for that. And this article came up. So if you would like to get me to forward this to you, just go to my website, click on the contact us, say, could you forward me that article about when the country will reopen? And I'll copy the link and send it to you. So how's that? In the meantime, you can call in here, 216-901-0945 if you have a question. And while I'm waiting for that, I think we have somebody's, okay, that's not a call. But I'm going to, I'll go right to that article. So it starts off by going, how will we know when it's safe to leave our homes again and reopen the country? Experts offer 4 key signs. But first, writes the New York Times, it's important to realize that it won't likely happen all at once. Here are the ways individual cities and states can tell if they recovered from the coronavirus pandemic. Hospitals can safely treat all the patients who need it. At least everyone with symptoms can be tested. All confirmed cases and their contacts can be monitored, and the number of cases falls for at least 14 days. We'll come back to this after these commercial messages. You're listening to Bill Bullington right here on 1420.
Been down the broken road now. I've been through that fire. There's angels holding on to both sides of the wire. I'm lagging when I need to carry you through it. Stay back or get on track, 'cause I can't have you ruin it. I said, hold on, but don't hold me back. Hold on, but don't hold me back. Hold on, but don't hold me back. You just hold on.
And we're back. So, I was just thinking, I'm reading through this article, and I actually went to the actual article in the New York Times. How will we know when it's over? And so I'll review a little bit of it. And I just had a couple thoughts here I thought was kind of interesting. Anyway, it says some cities and states will recover sooner than others. Well, no kidding. We're really far apart in this country. There's a lot of land here. Anyway, it's helpful to have criteria by which cities or states could determine they're ready. A recent report by Scott Gottlieb, Caitlin Rivers, Mark McClellan, Lauren Silvis, and Crystal Watson staked out some goalposts. They said hospitals in the state must be able to safely treat all patients requiring hospitalization without resorting to crisis standards of care. All right. Other cities and states fear they will approach New York City's state of crisis. They're trying to increase the number of available beds and ventilators, as well as doctors, nurses, and other healthcare providers, to make sure they aren't overwhelmed in their capacity to provide care for all of those who need it. Okay. That actually doesn't say a lot, but anyway, this is the most immediate bar. So essentially they're saying anybody that comes into the hospital, we need to be able to take care of them. That's how we'll know that the crisis has peaked and may be on its way down, when we can take care of everybody that's getting sick. It makes sense. Anyway, as they said, this is the most immediate bar and the focus on most public health officials' attention. At the moment, there's no reason to believe any area is over a surge of cases, and analyst models predict many places won't peak for weeks to come. And that's underlined. And again, if you want a copy of the link to this, just email me. I'll get it right to you. A state needs to be able to at least test everyone that has symptoms. Dr. Gottlieb and colleagues estimate that the nation would need to have the capacity to run 750,000 tests a week. This is after things have calmed down greatly. There are times we might need even more. Now, this is where I get really upset with the writer, with the journalist. When he puts $750,000 down, or she, that's a lot. You're talking about about $3 million a month, or about $48 million a year, and everybody goes, "Oh my God, we can't do. How are you going to do that?" Let me tell you something. You know what the market for cars in the United States is? It's over 50 million a year. They sell 50 million cars a year. And you're talking about doing less than 50 million on these tests. Which do you think are more important? By the way, which test, does the test take longer than it does to buy a car? Have you ever bought a car? You see the process you go through? You know how much paperwork is involved in buying a car? And that's what gets me upset with these guys who are writing the articles. They're writing them to try to incite fear. People love doing that. And I know you all know people out there who love talking about how the end of the world is coming. This is it. This is the big one. And you know what? Don't listen to them. It's not the end of the world. 750,000, is it a lot? Yeah. But we sell more cars than that. And when you're talking about 20 million, that's less than 10% of the population in the country. So, see, they don't say that stuff because then you would go, oh, well, hey, I wonder if we can go for a walk in the park. So you drop your cell phone, you drop your laptop, you get off the computer, you turn the TV off, and you go outside to play because you realize things are probably going to be okay. Yeah, and you've got this time off. So yeah, it gets a little upsetting when you see people just constantly trying to stoke the public. It's one of the reasons that they're such crappy investors. Go to Dalbart. Look at this. Look at what the average investor does. One of the keys to being successful in investing or being better than average is not panicking. That's the key. That's the biggest key. And you can have mediocre funds, but if you don't panic and you have a relatively reasonable investment strategy, let's say, I don't ever want to be down more than 30%. I couldn't take it. I couldn't sleep if I was down more than 30%. Okay. Don't put more than 60% of your money in stocks and put the rest of your money in short-term bonds, which, by the way, went down again last week, but not nearly as much as, or over the past few months, but not as much as stocks, and they've rebounded very quickly. That's how you know there was full-blown panic again. That we went through what we've just gone through in the stock market. It's been a full-blown panic, because it wasn't just the stock market. It was everything. It was every facet of the stock market. It was fixed income, for Pete's sake. That blows my mind. High quality short-term senior debt whose interest rates change with the interest rates over time, so you don't have the interest rate risk, or at least you're not supposed to. And they went down. That's panic. That's actually panic. Now, that was actually a couple weeks ago, and the market's been rebounding. A lot of companies out there still looking really attractive. The last part of today's program, I'll probably talk about a few of them individually. Don't ever take my word or anybody else's word for that's a great stock and load up on them, because they're stocks. They fluctuate a lot. The best ones fluctuate a lot. So you got to keep that in mind. And what's really difficult, by the way, when is this going to be over? Oh, I don't know when the actual people are going to get back to work. It'll take the economy a little bit of time to rehire some of the people that were on unemployment now. And that's all you see, record numbers. Well, guess what? We had record underemployment for almost a decade. There were more people, more jobs than there were people. And everybody was worrying about, inflation, because you've got all this, there's a shortage of labor. Back decades ago, when I was in school, they taught us that the unemployment rate below 5% was utopian and unattainable, and certainly not sustainable. We've been below that level for years now. So it's interesting. It is interesting. And I just want to tell you that there's no way that these companies are, especially the bigger ones, are going away. Government's doing a lot of really good stuff, and it's good. I like what I'm seeing. I really like what I'm seeing. It's really interesting to me. I don't know about you, but it snowed like 2 or 3 times this week where I live. And one morning I got up, I went to bed, I woke up, there was over 3 inches of snow on the ground. I couldn't believe it. 3 inches of snow. And it's April. It's almost the middle of April. That hasn't happened for, I can't even remember. It's been so long. But I also remember when I was living in Brunswick, back in the mid-'70s, that was pretty common. In fact, it wasn't uncommon to have a lot of snow, 10, 12 inches in April. On the streets that I lived on, it wasn't uncommon to have ice on the streets in May because the ice would get so thick from all the snow that we had and all the cars running over it and packing it down, creating our own little mini glaciers, that you would have ice on the streets in May. No, people seem to have forgotten about that. I didn't forget about it because I didn't have power steering. You want to talk about challenging? Driving a car with no. You talk to the kids today. What do you mean? No, what's power steering? It's pretty funny. But anyway, hey, if you have a phone call, question, or comment, you can call us 216-901-0945, 216-901-0945, and and also you can reach out through email if you've got questions. If you'd like to set up again a Quaden meeting, I've been working on a lot of stuff. This time I've been going into the office almost every day, which is really kind of funny because we all have home workstations where we've always been able to work from home. Actually, it's a requirement for a registered investment advisory firm. You have to have off-site access to all of your custodians and basically you have to be able to do everything you can in your office outside your office. And you have to have the data backed up in 3 different places around the country. That's kind of interesting. So anyway, I'm going to go to the phone right now. I've got Matt. You've been waiting patiently. Matt,
hey, Bill.
How you doing?
Happy Easter weekend.
Thanks, you too.
Hey, a couple of things and a couple of questions for you. So I had called you probably about 5 weeks ago, right before everything kind of blew up. And I remember you were talking, but you were looking at one of those a pharmaceutical stock that was investing or working on a medication related to all this. And right. I was kind of wondering, one, how that all worked out for you. I know you were looking at the scans. I was wondering if you pulled the trigger on that one and how things worked out with that.
Well, actually, that's a stock that's in one of the funds that I own because I always check that before I even talk about it.
Right.
And so, yeah, from that standpoint, it's been helping the fund. Did I put individual money in it? Nope.
Right.
And the stock, since we talked about that, it's up about 33%.
Okay, wow.
Yeah, so yeah, the company was called Regeneron, by the way. But and there are others too. That wasn't the only one. There are a lot of stocks in that space that, and that's why, again, we're going to come out of this. They're developing drugs for it. They're developing treatments. You can bet that the respiratory therapist is going to be a hot item in most community colleges because you can actually get one of those jobs in many cases with an associate's degree, and they pay pretty well.
Wow.
Yeah, so then you could go back and pick up your bachelor's and a master's degree if you wanted to while you're working and earning a decent living. You can bet that they're going to have respirators on hand now from now on. If they don't have room in the hospital, they're going to have to rent space somewhere or build it to keep those things. So, it's kind of going the same way I kind of thought it might eventually. That's the thing. You don't know nobody knows exactly the timing of all this stuff.
Right.
But people are still going to need healthcare maybe now more than they have in the past because I don't know that this actually goes away, and nobody does, not yet. If
right.
They can get an effective treatment that basically makes us immune to it in the future, who knows? I do think I had it though. It was in November. I was sick I've never been that sick before. All the I thought I had food poisoning and the flu at the same time. That's what, because nobody was talking about it. And man, I literally, if I had been in my 70s, there's no way I would not have made it. I've never been that sick. I was in the office for 2 hours and then I would go home and sleep. I was sleeping like 14, 16 hours for 2 weeks. And then, yeah. And then after that.
And I've heard, yeah. Oh, go ahead. I'm sorry, Bill.
After that, I was still sleeping like 10, 12 hours, and it just slowly, gradually, I got better. But
well, I heard a lot of people that said the same thing, that late fall, winter, they think they already had it. And then, so then the other, question, I caught the beginning of your show where you're talking about, yeah, you're right. I mean, America will always rebuild. I mean, we're definitely the best country in the world and resilient and so big. And anytime something like this happens, there's obviously going to be sectors that, prosper and others that kind of wither away. And I guess asking you, what do you, in your crystal ball, see in the future of the sectors? I mean, I think, I don't know, I see some of the tourism and the airlines, some of them closing up or getting merged in other companies, but obviously the stronger ones will still come out. But what else do you see down the road related to that kind of stuff?
I would probably look at companies who don't have a lot of debt, because if this were to last for another 6 months, that would be devastating. So the particular industries, healthcare is going to do fine through all this. Actually, healthcare will prosper. Anything related to healthcare, companies like Procter and Gamble, which really haven't gone down much at all. They went down a little bit, but they've now they're back at about $115. The high was 125, and it only got down to 95 for a brief moment in time. That was one day, and then it started springing back up. So because people are still going to brush their teeth, they're going to take baths, they're going to wash their clothes, that kind of thing. It'll still hit their sales and earnings for this year. And that brings up a good point. One of my clients called and said, hey, could you talk about this on the radio show? Normally when you're doing evaluation, you're looking at the amount of sales that a business has done, and you're looking at their profit margins. That's how you start to arrive at what this company might actually be worth. And that's going to take a hit this year. What do you use as a guide? And I guess the best answer I can think of is I would look at the year right before this happened, understanding that it may take some time to get back to that level. And then I would take it from there. And demand's not going to, aggregate demand for the economy is not going to decline because of this. It's actually going to increase. You're going to have all these new positions, all this new technology, that's coming into addition to what we had prior to this thing showing up. It's kind of like the 9/11 thing. We got Homeland Security now because we had 9/11. It caused the economy to grow. It's not the kind of growth that you'd really like to see, but again, looking at the silver lining, it's growth, and I'll take it. But I think a lot of your retailers, a lot of your retailers will be fine. A lot of retailers will do better than they've done before. Car sales, that could slow down. It's really difficult to think about putting out the kind of money that you have to put out to buy a car when the economy is like it is right now. So that's a psychological thing. Hey, Matt, can you hang on a second? I got to go right to a commercial break. Okay, you're listening to Bill Bullington right here on 1420. I'll be back after these messages.
She breathes the air and flies away. She thanks to Jesus for the daisies and the roses. No simple language. Someday she'll understand the meaning of it all.
And we're back. You're listening to Bill Bullington. I'm here every Saturday morning from 11 to noon, 1420. You can also find this as a podcast on my website, bullingtoncapital.com. If you heard something you wanted to catch it, but you weren't able to, you can always go there and re-listen to it, or on the Fishes podcast at 955thefish.com. And I'm going to go right back to Matt. Hey, Matt, was there anything else I could help you with?
No, I was just gonna kind of put something else out there that I just wonder if after this whole thing happened, that will there be a segment of society, and let's just say it's 10 to 20%, where they will pretty much never ever attend a large venue again, or get on a cruise ship, or get on an airplane, and it's like that's not a huge percentage, but you factor that into the, I guess, permanent income of maybe some of these businesses. Like I said, the airline industry, the concert industry, the cruise industry, where those industries may have to revamp what they do. Like, I don't know whether it's smaller ships or or maybe bigger rooms or more spacing between people. I mean, does that kind of make sense?
Well, it does to a certain extent, but they'll probably make the adjustments. I'm sure they will, and I'm really not sure that the people that like to go to those types of events, like I played Division I football in college, okay, and I'm telling you, I think I've been to 5 games since I stopped playing in college. I would never go, and you know why? Because of the crowds.
Right.
And I've been on the bottom of way too many piles to ever want to go through that again. But so I don't know that it would actually affect those people, because they're, you have to really go out of your way to go to any sort of a professional sporting event. So you're really a fan. So maybe the people who are kind of wishy-washy, or just got tickets because they got them through work, or somebody gave them to them, maybe they don't go. But I think that the hardcore fans, I think it'd be really difficult to discourage them from attending the games. So you probably get the people that were like just one way or the other, just kind of on the fence. Oh, I got the tickets, I might as well go. Yeah, they're probably going to give them to somebody else. But so that's just my guess. All right. And I could be wrong. Actually, one of the things that you got to get used to when you manage investments is being wrong.
Right.
You're going to be wrong a lot.
Right.
So you have to make sure that you're doing the best you can. Don't throw your hands up in the air, but you make good decisions on the information that you have. And when that information changes, you probably need to change your opinion and stop losing your money.
Right. Oh, yeah. Yep. Well, thank you, Bill. Have a great weekend. Happy Easter.
Thanks, Matt. You too.
All right. Bye-bye.
Bye. All right. I'm going to go right to Mike. Mike, do you have a question for me or comment?
Bill, good morning. How are you?
Good.
Happy Easter.
Thanks. You too.
Beautiful day outside as I see everyone outside cutting their grass and doing my 5 miles, trying to stay in shape.
Yep. Yep.
Hey, you're certainly a calm voice for stormy seas as usual. So listening to your show the last 3 weeks, you've been spot on. So appreciate your calm voice and perspective. It's great.
Oh, thanks.
Wanted to talk about some of the modeling that's done with respect to this hideous disease.
Right.
Like Dr. Amy Atkin here for the state of Ohio with Mike DeWine.
Right.
I don't want to say that their pressers are a little morbid, but it is what it is. But she revised her model from 10,000 cases a day to 1,600 cases a day. Now, that's the simple math of that is whatever model you used, and then of course the FDA and the CDC and the NIH went to our president and said that you could lose up to 2.2 million people if you did nothing, and that was revised down to 1 million, which is revised down to 240, which was revised down to 100,000, and now it's at 60,000.
Right.
I'm just the relative. Everything people do is, especially with investing, is around confidence, right? You have to have confidence.
Right.
And I don't know about you, but when I take a look at, do you know heart attacks are down 55% nationally in March, and strokes were down 62%? So no one's having strokes or heart attacks just this month by that amount. It's been that way for 20, 30, 40 years of data. And all of a sudden, they just dropped off in March.
That's funny.
Did people stop having them?
You got me. Maybe they're just afraid to go to the hospital.
No, I think at the end of the day, that anything that comes in is, if they could resemble, according to Dr. Brick, if it's close to being COVID ID, even if it's a heart attack, if their symptom is in there, they attribute it to a COVID-19 death. So, people have to have confidence in the model, but certainly the models have proven to be anything but correct.
Right.
Anything but correct. And to say 1,600, I think we had 59 yesterday in Ohio. I think the day before we had 2.
Well, you know why people, why they do models, right? It's because the general public demands them. They demand an answer, so these guys have to come up with something.
Yes, sir.
And they'll go ahead and continue to collect data. And so then the smart thing to do is to come back and say, hey, look, we've got new data we didn't have before. Here's our new projection. And that is actually a pretty smart thing to do. What I would think would be the brave thing to do is say, look, we don't know. This has never happened before. We've never experienced this before. We're gaining experience, knowledge, and this is what we think we should be doing based on all the knowledge we have today. But that's going to change as new information comes in, and you must be flexible. But the general public hates when you say that. They want you to make a prediction, and they want it to be accurate. They want you to be...
my friend, being 90% wrong, if your clients gave you, different monies at different times, and for the 6th time in a row you were wrong, or I was wrong, or anybody in the business that is wrong, it would be the relative confidence for them to invest with you would be a little lessened, right?
Well, that would be, and that's when you're in a new territory, when you really don't know, and you're trying to use data that may not fit the current data set, but the public demands an answer. They demand an answer. So
then if you take a look at California and you take a look at New York City, I mean, I think the social distancing started in California 2 days before New York. And how do you attribute 10,000? I don't know how many people have died in New York, Lord rest their souls, but how do you attribute 700 people dying in a state of 44 million to what's happened in New York City? And the social distancing has coattails, and the coattails is I don't think there's a restaurant that can make it with 1/3 being full every night, or a plane flying with 1/3 of the passengers. So you would pray that science and technology give us something to give people the relative confidence to do what they need to do to resume their lives.
Well, at some point in time, I fully, I believe that's going to happen. I think this is not.
Yeah, you and me both.
Yep. So, well, hey.
You and me both. So let's be well, my friend.
Thanks.
Happy Easter.
Thanks, you too. Bye-bye. And, hey, if you'd like to call us, 216-901-0945, 216-901-0945. By the way, with your investments, realistically, you shouldn't be doing much that you weren't doing before. You shouldn't have changed your plans because of this. It's okay to make small adjustments. That's fine. Don't make huge adjustments because the markets move too fast in both directions. You should be coming back to levels, and we'll talk more about that next week because I only have a few minutes left on my radio program. Sorry about that, and I didn't get to talk about the individual stocks I wanted to. And I have to take another call really quickly, and this is my old buddy Jerry. Jerry, how you doing?
Hey, William. You had said earlier that you thought semiconductors might be doing well and not to down the road, we'll say.
Yes.
What do you Van Eck, the Van Eck semiconductor fund?
I've got I hold that one, but it's in a group of 5. So I have 5 of them because I really wanted to get coverage, as much coverage as I could in the entire industry. And the semiconductors is one of those things where, this is going to put a big drop in their sales. Profits are going to be, more than likely, they'll be negative for a quarter or two. But that's one of those things that pops back like super quick. And
yes, it did.
They're going to pop back even quicker when the all clear sign is being given to all the investment professionals out there. I'm talking about the BlackRocks, the Fidelities, Vanguards of the world, the big pensions that have these guys, they've got their full attention because they're managing a lot of the money for those pensions. And the money, when you think about it, once you create money, it's kind of like electricity. It's out there. You create the money, and it's going to stay. Now, it congregates, and then it dissipates. And it congregates and dissipates. But once it's...
And it's fungible all the time.
Yeah. And but once it's there, it's there. So it's got places that you can put it. You can put it into businesses. You can put it into, if you're an investor, you can place it into the stock market. You can buy bonds with it. You can buy gold if you want to, assets you can touch, gold and real estate, or you could just leave it in a savings account or, short-term CDs. But that's pretty much it. That's all you got. And once you've created them.
I was just going to, I'm sorry to interrupt. I know I'm short leash. How about one other fund in the semiconductors you like?
They're actually, I'll tell you what, I'll email you an illustration. It's got all 5 of them in it.
Okay, that's fine.
Okay.
That's fine.
All right.
I'll send you a link on Monday. So
Okay.
have a good Easter.
Thanks, you too. And thanks for listening, everybody. I'm Bill Bullington. I'm here every Saturday morning from 11 to noon. You can find me on my website, bullingtoncapital.com. Reach out if you have a question. Have a good week, everybody. Good luck, and happy Easter.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.